Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 5th of November, 2015. We're having a good trading week. Wednesday was kind of choppy. I wouldn't say it was impressive from a trading perspective. Markets gapped up and sold off. We had a really nice futures trade early, got us a lot of money there. And then after that, it was just a choppy mess. I would say overall, we'd make new lows, come back to the midpoint, stall out again, make new lows, come back to the midpoint. Largely unexciting, even though volume was 1.9 billion shares on the NASDAQ. Here's a look at the ES front month futures contract. This is the daily chart of the ES. And again, we've recovered the whole drop from August now, and we've stalled out right where that began. Not much else to say at this point. There's no technical real breakout. The S&P has not made a new high yet, although the NDX has. We'll take a look at that here in a minute. So the S&P lost 7.48 points. Notice that we completed a 9-bar startup phase to the upside. So we now have the red static trend line potentially in play below on the S&P. The NDX had a new closing high on Tuesday and then lost 1.5 points on Wednesday to the close. So still hanging out up there near that all-time high. We had the SOX up only a 0.79. That's a non-move for the SOX essentially. Biotech's down 12.23. Also basically a non-move. Crude oil back down to 46.52.50. That's down over a buck. We've got the VIX was up 97 cents, curling back up over 15. Trend closed with a high print of 1.67, brings the 10-day moving average to 1.11, so there's nothing meaningful in that data. NASDAQ volume was 1.9 billion shares, which is good. The 10-day moving average there is about 1.84 at the current moment. Remember, we still have a couple weeks here free open trading. This is a good time of year. Then we take a short pause for Thanksgiving, and then again in December until the Christmas break. So it's usually a great time of year. January, February, and March, also great trading months. So we have all the better trading months ahead of us here. We've got the advanced decline ratio on the NASDAQ was negative 48. That means there were 48 more stocks down than up on the NASDAQ, but it was negative 620 on the ES. Market breadth has not been great on this move up. I will just say that in general. That's not a positive for the overall market. Google gained 6.49, a new closing and trading high today on Google all-time. I guess I should start calling it Alphabet because they do. Here's Apple, lost 57 cents, trying to make its way back to that green static trend line there that you see. Amazon up 15.64, also running to new highs. Remember, we are now in the time of year where stocks that have been up for the year, like Amazon, like Google, not so much Apple, will tend to continue to run. The reason being that people are not going to want to sell and lock in gains, and of course, there's nobody underwater from any price point this year. So everybody's up. The earlier in the year you were in these stocks, the more money you're making right now. Nobody wants to lock in those tax gains, which means their selling dries up. The stock tends to jump higher. Some of these stocks could close significantly higher still by the end of the year. So right now there's just no selling pressure in stocks like Amazon and Google. And Netflix stands a chance of being one of those stocks as well. It's moved from below 50 up to over 100 here. So even though it's not at new highs, it's up significantly for the year. So just be aware of that. These types of stocks are going to start to look at the valuations and think they don't make any sense, but that is not a factor in how they trade the way they do. Here's the ES 5-minute chart just so you can see where we closed on the last half of Tuesday and then last half of Monday. And then Tuesday, we did not have a report last night as I was wrapped up, but we climbed on Tuesday, pushed higher over lunch and topped out about 2 hours before the close and then came back a bit. So here's the Wednesday now, small gap up, filled it, and you can see the bouncing, very choppy action. One of the choppier days we've seen in a while, as I said, despite the fact that we had volume. Here's the NASDAQ, even narrower really for the NASDAQ and choppier. So that wasn't overly exciting as a session, although the futures certainly got us some nice gains. Here's a look at the data coming out on Thursday. We've got the weekly initial and continuing jobless claims along with Q3 productivity. And then an hour in, we've got natty gas. We also have the Challenger job cuts at 7:30 a.m. Eastern time. That's 2 hours before the market opens. The key to remember is that on Friday, we do have the unemployment rate and the non-farm payroll data. That's some important number there. So market will be potentially gapping on that news on Friday. That's about it. Charts, as usual, brought to you by eSignal. If you've not taken a trial of our services, feel free to do so. We will help you out for a couple weeks. And if you do find these videos useful, please like them on YouTube. It does help us out. Have a great trading Thursday.